Good day, ladies and gentlemen. Today we will be doing FAC 1501 June 2018 question number 4. Okay, by Soli at 0744216332. So now this is the question here. It's unfortunate that I don't have a hard copy question paper. But anyway, as you can see, the question reads, Makena Maintenance Service is a sole proprietorship which provides plumbing service. The business is not registered for VAT. Makena Maintenance Service uses periodic inventory system. The following transactions were entered into by the Makena Maintenance Service during October 2017. So it seems like we've been given these transactions which took place in October 2017. So this is what I did right here. Okay, October. The first thing we have on October here is date on the 4th, on the 10th, on the 15th, 20, 22, 23, until the end of October. So now what we're doing here, they're asking you that for each of the transaction listed above indicates the effect of the transaction on the accounting equation. Use a plus sign to indicate an increase and a minus sign to indicate a decrease in the elements of the accounting equation. Also indicate the general ledger accounts affected. So the general ledger accounts affected are these ones, debit and the credit side. So it means you have to show if the transaction gonna affect the debit or the credit side of the ledger accounts. So let's get started without wasting our precious time. So this company, first of all, it's a service company. So for a service company, we don't have what we call a tangible stock, tangible merchandise, or tangible inventory. Okay, so it means their stock is part of the tools which they use for catering that maintenance, whatever they are doing. Okay, so when they buy tools or materials which they use for that for catering their service, that is that is their inventory. And the other thing which you need to check here, they said periodic inventory system is in control. The periodic inventory system. So we have two inventory system. We have a periodic and a perpetual. So now, if we are using a periodic inventory system, it means we don't have inventory in our transaction. Make sure that you don't include inventory. We don't have inventory. So instead, we substitute inventory by purchases. Okay, why? In periodic inventory system, they assume that whenever you buy stock for reselling, it means you have incurred an expense, and then purchase is an example of expense. So now inventory is not there, but wherever you're supposed to put inventory, substitute by the term purchase. Okay, I will explain further when we are doing the transaction. So there is something which you must know again. On accounting equation, we're talking about assets being equals to equity plus liability. So now the thing here is assets, they are positive on the debit side. Okay, before I can start, you need to know this. We have assets, and we have many examples of assets. We have a debit side and we have a credit side. So they are negative on the credit side and they are positive on the debit side. These are the assets. For example, I can talk about things like bank, inventory, I can talk about things like vehicles. Okay, I can talk about things like data control. These four, but the list goes on. We have a lot of them. Okay, so now from these four, how can someone tell that they are increasing or decreasing? All of these four. Okay, we have a bank. Remember, a bank is a separate account which you use for the business, where you receive the money and where you pay out the money. For instance, the bank can receive the money through the sales. So I'll advise you to go to page 52 of the start guide, FAC 1501. Page 52, you will see a table of accounting equation and you will see some examples of assets. So now, under what circumstance should someone debit the bank? Okay, the bank increase when it receives money through incomes. Maybe it's a rental income. Okay, maybe it's an interest income. Okay, through the sales, through commission income. So whenever the bank is receiving money, should be debited. Again, the bank can also decrease. So when it decreases, it should be credited. So it can decrease when it is paying for the expenses, water and electricity, wages, and so forth, advertising, telephone. So when the bank is paying for the expense, it decreases. Let's move to inventory. Inventory, remember, it's what you sell, it's what you buy for reselling. Okay, or it can be something you use for catering your service. So how can someone tell that the inventory is increasing or decreasing? So if you are selling bread, if you stock bread, if you buy bread for reselling, it means you purchase bread for reselling. It means your stock is increasing. So as a matter of fact, you need to debit inventory, because inventory is an asset. It increases on the debit side. So it means you'll come here on the debit side and say inventory, and you write by how much did that inventory increase. So you show by the positive sign. And the inventory can decrease. For instance, inventory can decrease when you sell out. Okay, you bought bread and now you sold the bread. So when you sell out, inventory is decreasing. It can also decrease when you donate. Remember, donation is an expense, but when you donate inventory or part of the things that you are selling, it means the inventory is decreasing. Or if the owner took for personal use, which is a drawing, if the owner took bread without paying for it for personal use, so it means inventory will decrease. So now when inventory decrease, it has to be credited. Okay, we have the vehicles, which is a non-current asset. So the vehicles, when you purchase a vehicle into your business, it means the vehicles increase. Okay, so you're gonna have to debit the vehicle. We have a debtors control. So this control, remember, a debtor is a person who owes a business or a company. So now if you have a company, if most of your transaction or of your sales are on credit, so it means you have lots of credit sales, so you have lot of debtors. Debtors, remember, the peoples that are owing you. Now what are you going to do? The amount of money those people are owing you, you have to record it in your debtors control account. So by the moment the people start to buy on credit from you, it means your debtors control is increasing. As a matter of fact, you need to debit the debtors control. But there is a situation when those people who bought or who previously bought on credit from you, they decide to pay off whatever they've been owing you. So what's going to happen when they pay off? It means they owe you less when they pay off. So the debtors control, it will be decreasing, and you will have to credit the debtors control. Okay, we also have equity. Equity in accounting equation. So equity is subdivided into two. We have incomes. We have we have expenses here. Expenses. Okay, on income, for instance, we have capital. which is the money used to start a business with. We have our sales, we have rental income. Okay, if you go to page 52, you will see lots of examples. Expenses, we have drawings, we have a donation. What is a drawing? That's when the owner of the business take for personal use without paying. A donation, that's when you donate to other people. So a donation can be in two. We have the one you give out, so it's a granted donation, it's an expense. But you have another donation that you receive, so a received donation is an income. We have a lot of expenses here. So what's going to happen is that all these expenses, they have to be debited. Why? Because they affect the equity of the business negatively. They always reduce the business. So whenever you're paying for these expenses, remember the equity will be decreasing. And then another thing here on income, all the examples of income should always be credited. Why? They increase the equity of the business, so they are positive to the equity of the business, so they should always be credited. And the expenses, they should be debited because they are negative to the equity of the business. And one more thing, we have what we call liability, which is an obligation. Okay, so now what's happening here? Liability, this is a situation where you purchase from your suppliers on credit. So it means the moment you purchase on credit, you create a liability. Now we don't actually have a liability account, so instead we have what we call creditors control account. Okay, now what they say liability, they are negative on the debit side and they are positive on the credit side. So when you buy something on credit, it means you created your liability are increasing, so you're gonna have to credit the creditors control. But now when you pay off your liability, it means your liability is decreasing, so you're gonna have to debit the creditors control. Don't ever debit liability. Liability is not an account. The account we use is creditors control. So let's get started. Okay. So now here's the thing. Our first question here says number 4. On the 4th of October, plumbing repair service rendered on credit to Mr. B. Latehan at how much? At 900. Okay, service rendered. Remember, this is a service company, so when they render a service, that's how they make sales. They don't sell tangible things, but they sell their service. Okay, so now it means we have to identify two accounts which are going to be affected. First of all, if they render a service, it means sales account is going to be affected. And remember, a sales account is a what? It's an example of income. And since it's an example of income, it should be credited always because it increases the equity of the business. So I'm gonna come here and say on the 4th, we have sales. Okay, let me make it earlier. We have sales. Why did I credit the sales? Because sales affects equity positively. So by how much? They said by 900. So it means when they render a service of 900, equity will increase by 900. So remember to show the plus sign. And then this service which was rendered, it was on credit. Look here, they rendered a service on credit. So when you render a service on credit, it means someone is owing you. And remember, the person who owes you is your data. So once they owe you, it means you're going to record whatever amount they are owing you in your debtors control account. So what are you going to do? You will come and say, since a debtors control is an asset here, debtors control is an asset, so you rendered a service on credit, so it means the assets are increasing, so you debit the debtors control. So coming on the debit side, I say debtors control. Why am I debiting the debtors control? Because the assets will be increasing by the same amount of 900. That's all. And then there is no liability. You can put 0. So this is how we do it. Okay, let's move to on the 10th. On the 10th, they said obtained printing service from AB stationers and paid by check. Okay, obtained printing service. So when they obtain a printing service, I will advise you to go to page 52 on the start guide. You will see on equity we have a stationer under the expenses. Okay, so it means stationer is an example of expense. So maybe they were printing the pamphlets, so pamphlets will be part of stationer. So stationer is an expense. And what did I say about the expense? I say the expenses, they affect equity negatively. They affect equity negatively. As such, they should always be debited. So if stationery is an example of expense, let's debit stationery here. Come here and say stationery. Stationery. Okay, and then this stationery, why did I debit? It is because it's gonna affect the equity of the business by minus 200. So equity will be affected by minus 200. Okay, remember this stationer was paid by check. So if you pay by check, now the bank of your business will be affected negatively because it has to issue out that check of 200. So remember, the bank is an asset. So since the bank is an asset, they are negative on the credit side. The bank, remember, is paying out the check of 200, so it's being affected negatively since it's paying out. So you're gonna credit the bank. So on the credit side, I'll come and credit the bank. So now the question is, why am I crediting the bank? Because it is affected negatively by losing 200. You see how it goes, and then you don't have a liability. So this is how it operates. Let's move to on the 15th. They say plumbing tools and equipment bought from ABR Plumbers for cash is 9,600. They bought the tools and equipment. So remember, like I said, this is a service company that don't have inventory. So tools and equipment is part of their inventory. So now it means they purchased inventory. And I went on to say that since they are using periodic, it means we cannot consider the tools and equipment as inventory. We'll substitute the word inventory by purchases. So it means we have purchases. So whenever they purchase those tools, it means they are incurring an expense, and purchase is one of the example of expenses under periodic. So and expenses, they should always be debited. So we're gonna have to debit the purchases here. So I'll come here on the debit side and debit the purchases. Okay, why did I debit the purchases? Because when they purchased these tools and equipment, equity was affected negatively by minus 9,600. Okay, so come on equity and say it was affected negatively by minus 9,600. And then where did they get this 9,600 from? Obvious, from the bank. So since the bank is an asset, it's going to be affected negatively, so we'll credit the bank. Why did you credit the bank? Because the bank is going to pay out 9,600, so it's minus 9,600 of the bank. Since the bank is an asset, that is why I'm writing under the column of assets. Okay, let's see on the 20 what happened on the 20. A check received from Mr. B Latahang 500. Okay, Mr. Latahang is the first person who bought, okay, who the plumbing service rendered a service on credit to. So this person was owing 900. Now this person pays 500. So it means this person is reducing his liability. So our debtors balance is going to decrease if we assuming that we are the Makena maintenance service. So it means if Latahan is owing us and he pays 500, it means he has reduced our debtors by 500. So now, since a debtors control is an asset, when the customers who were previously owing us pay, it means the debtors decrease, and when it decreases, it should be on the credit side, because assets decreases on the credit side, or assets are negative on the credit side. So let's credit the debtors control. I'll come on the credit side and say debtors control. Why did I credit the debtors control? Because Mr. Latehang is now owing us less. So I'll come here and say on the assets we have a minus 500. Okay, so debtors control reduces the assets by minus 500, but at the same time assets are going to be affected. How? Mr. Latehang, who is this person? Mr. Latehang was a data. So now since he paid, it means the business is going to receive the money, and what's going to receive the money is the bank account of the business. So now bank is being affected positively. We're gonna have to debit the bank, because it's going to receive how much? 500 when he paid that 500. So here it's gonna be minus and plus 500 under the column of assets, because debtors control and bank, they are all assets. These are all assets, so the effect will only happen on the what? On the column of assets. So here we're gonna have 0 0 0 again here. Okay, let's proceed. Moving to question number 22. Plumbing repair service rendered for cash. This time around, service was rendered for cash. The bank is receiving money, so we're gonna have to debit the bank, because it's an asset which receives how much? So when you render service for cash, you receive 2,700. 2,700, so it's gonna be plus on assets plus 2,700. And the other thing, you rendered a service for cash. So remember, service is part of your sales. So when you render a service, it means you're making the sales, and the sales affects equity positively. As such, since the sales affects equity positively, they should always be credited. So I credited the sales. Do you see? Thank you. And then I'll say now the sales are going to affect equity positively by plus 2,700. No liability. Let's move to question 23. Question 23. The owner took plumbing material from the inventory of the business for own use, and that material worth how much? 700. No. That material worth 600. Now remember, if the owner took for personal use, it's a drawing, and a drawing is an expense which affects equity negatively, and it should be debited. Now I'm gonna come and say drawing, come here on the debit side. Why did I debit the drawing? Because it's affecting equity negatively. So come on equity and say minus 600. Thank you. And then what did the owner took? He took inventory. And remember, since we are using periodic, we don't have inventory, we have purchases, because the term inventory is being substituted by the purchase. So now remember, a purchase is a what? A purchase is an example of inventory, so it means the inventory is decreasing. In this case, we're going to credit the purchase here. We will not ever say we'll credit the inventory. No, we'll credit the purchase. Okay, now why did we credit the purchase? Because this purchase was an inventory, so it's gonna be minus on assets 600. Okay, let's move to question number 28. Here we have 0. Question number 28, we have bought plumbing material on credit 5,000. Okay, so if you buy on credit, you create what you call creditors control. So creditors control, it increases your liability by 5,000. So liability will be plus 5,000. Okay, what did you buy? Plumbing material. Okay, so you bought plumbing material, so it means you made a purchase, and a purchase is an expense. So now the expense will reduce equity by minus 5,000. Okay, let's do the last one. I think I'm running out of space, that is why I'm running. Number 30, paid wages 8,000. So wages are an expense, so expenses should always be debited. Debit the wages and say this expense will affect equity negatively by minus 8,000. So where did you take this 8,000 from? Obviously from the bank. So bank is decreasing, so I'm gonna have to credit the bank. Credit the bank here because it's decreasing the assets by what? By minus 8,000. So this is what happens. So we've been doing June 2018 FAC 1501 question number 4, which was 26 marks. So this is how you do everything. Okay, all the best. So the video will help you. You can rewind, you can replay. So all the best, guys. That's all. If you want to screenshot here, let me just hold for you. Thank you.